I'm sure most of you would have invested in mutual funds. If not, then please do and benefit like so many investors who have contributed towards 40 lakh crore of AUM of mutual funds in India. In today's video, I would be giving a brief history of mutual funds and also an overview of recent changes through taxation which have been implemented. So start with the history of mutual funds. The first mutual fund UTI, which is Unit Trust of India, was started in the year of 1963 by RBI and Government of India as an initiative to increase investments and savings. The first equity fund was UTI Master Share Fund, which was launched in the year of 1986, and the first debt fund was launched in somewhere in 1995. So the history of this mutual funds goes back to more than 2 to 3 decades. Now let's talk about the recent amendments to the financial bill which have been implemented. With these recent amendments announced on 24th of March, the taxation of certain category of funds like debt funds, international funds, gold funds, which have AUM less than 35% in Indian equities, the gains would be taxed as per the income tax slab and not at the rate of 20% after considering indexation. So this would actually increase the taxes for certain individuals, especially the ones who come under higher income tax slab, and also would take away the benefit of indexation. And the benefit of indexation was basically it used to take into account the inflation and increase the cost of purchase to an indexed cost, thereby reducing the gains and the taxes. And one of the reasons for implementing these changes could be the recent concern around the ALM, which is caused by the rapid credit growth of close to 15% annually, which used to be around 10% for last 5 years, whereas the deposits are growing at the slower rate of 10%. So to increase the flows into deposits from the 6.5 trillion rupees which are parked in long-term debt mutual funds could be one of the reasons. Now from impact perspective, since this is applicable for only fresh investments starting 1st of April, so we may see certain slowdown into new inflows into long-term debt funds and also would harm the development of bond markets in India. But from a medium to long-term perspective, other categories like arbitrage funds, hybrid funds, which invest 35% into Indian equities and rest into international equities, debt, and gold, may gain more traction. And also new sets of products being launched by mutual fund industry and as well as maybe higher investment into Indian equities. We at Alpha Capital are committed to smoothen this transition and work towards achieving the targeted goals and investment plans of our clients with the right asset allocation. Hope you found this informative. See you soon. Thank you.